Welcome, and here we're looking at gold on a daily chart, and I think that it's reasonable to view this particular pattern through here as still as a wave form, but as the A wave, and an A and a B and a C for the B wave, and the C wave up through to here. The C wave can be as long as the A wave here. However, we need to take one step at a time, and the first step here is obviously where the 1300 is the closest, largest number, and that's our target, and that's our resistance. The halfway between those, the 1250 here, that was resistance, and now it's support. So now we can look at that next level up there and all the levels in between that. So with that in mind, we're looking at the 1250 as a resistance here and support here now. We know that the next resistance is within group 2 here, but the particular wave count that's moving up through here it still has further to go to the upside. And if I drill into here, we were looking last week at this 1, 2, 3, 4, 5 developing, and then we were looking for an A and a B and a C. And we mentioned as long as the 1250, the midpoint, stays as support, then we can continue to be in our trend to the upside. So we can look at this as 1 to here, or probably even better still 1 into here somewhere, and 2, 3, 4, and 5. So basically building up, but using the levels. So if you long, stay long, stop would have to be now at 1246 or 1247, and look to add on top of 1272 as support. The silver market is at $20, or the mini contracts here 2,000. This pattern here is corrective. Nice sort of strong third wave looking here, so we'll see support here, and we'll see more highs come in through here. In line with that is the copper market moving up as well. We're looking at this particular trend line here, the bounce off that. I'm still not quite sure if this is a corrective bounce or an impulse wave. The count up here so far it can be either. It's still 535 ABC 1 2 3. So because this down here can be down for 1, back for 2, down for 3, back for 4, and then down for 5 here, giving us a impulse wave to the downside. But if we get 5 waves up here, then we can look at getting another 5 up there as well. So we will remain reasonably positive. If you've been long here, then you'll need to exit at 325, which is a midpoint. There'll be a correction across here. Don't worry about that wave forward. It's just a possibility at this stage, and we'll see how we go with that. But you can see here that from this is obviously A or 1, then we've got 1, 2, 3, 4, and 5 here. So I can see that this is corrective, so there'll be another little push up through here. So allow a corrective phase to unfold across the 325, and if it finds support after that, then we can look to go further up from that point. The oil market is moving up quite nicely just on the daily chart here. We've got up for 1 or up for the A wave here, back for 2 or the B wave, and now we're moving higher. So we'll be looking up here. This is the 1561% retracement level, but I think that it may be able to go past that as well. Just drilling into here, looking at it here. Obviously, it's going to, the ideal is to trade from 98 to 100, but it will stall here and display some type of corrective pattern across here, but should push up further from that. So we've got up for 1, back for 2. Nice third wave unfolding here. That may go up to 101, the fourth wave here, and then a fifth wave up through here. I also want to point out Brent as well. I've mentioned to keep an eye on that. So just bringing that into the fold here. It got a bit sort of tricky. We were picking this here as a low here and looking at this as being 1, 2, 3, 4, 5. And then we had this A wave, and A, B, and C for the B wave, and then the C wave coming here, really testing these lows here, but then picking up from here. So a nice sort of motive wave here, impulse plus corrective ABC zigzag there, and we'll be looking further up through here as well now. Right. The grains are also in positive mode as well with the indices and the other markets. So this is soybeans here. And one of the things here is that, as you know, we've been looking for support, a nice tested support on 1300 here. Yeah, so just look at the weekly chart here. What I wanted to point out here is that last week's volume was more than the previous ones here. So, we are seeing that strength come in. There are old highs here, so there will be a reaction from there. But we can, my main point here was actually looking at this as being corrective here, then up for wave 1, an A and a B and a C here, and then pushing up. So if that's the case, we'll see a wave 3 push up high, and our target up here is 1500 up here. So a really good trading opportunity is presenting itself here. And on the daily chart here, we're starting to count this again as up for 1, back for 2. I've got it up for 1 here, but I know it can also be corrective as well. But the main point here is our focus is in here. And one of the things here, it's taken out the top of the trend line here, which, and top of that move here, the top of that there, which confirms that we do have an impulse wave to the upside. So now we're looking for a retracement back, and this could be in line with the B wave that's going to occur in the indices as well. So with that in mind, what we have been doing is counting 5 waves up through here. So we've got up for 1, back for 2, just going over this because it's a new week. 1, 2, 3, 4, 5 for the third wave, the fourth wave here. And now we're looking at 1, 2, 3, 4, and into the fifth here of the 5. So that would be 1, 2, 3, 4, and 5 to finish that. Then we can pop that wave 1 over here. So we'll have this wave 5 of 1, and then we would be looking for a retracement. Now, how far this will come back is always a bit of a guessing game. So we just need to count the waves the best we can on the way through here. We're looking for a reasonable wave, 3-wave swing, one that would, if I can just come back to this little area through here and highlight this little section in here, we can see that this was 1, 2, 3, 4, 5, 6, 7 days here. So we want to see at least, in ratio and proportions and the right look and feel and perspective and yada, yada, yada. We want to see, if we've got 7 here, we want to see, 3 or 4 days of correction here before we get further upside. The bigger the correction, the better the next trend to the upside. So, so far, you should have positions anywhere above the 1272 all the way up through here, with the understanding that they were small positions and that we're going to get a correction. The correction that comes back can come back to the 1290. So you have to leave your stops out of the way from that point. So we'll be buying on the pullback. But the other point I wanted to mention as well in terms of corrections is that it becomes a corrective pattern when after we've got 3 waves here and this moves up here and takes out the low of this first leg down, okay, then that becomes the A, B, and C then, and that's when it's finished, and that's when we can start moving in at that point. There will be 5 waves up here and 3 back again, and then 5 up. So, yeah. Right, the wheat market, just pointing out on the weekly here that, is this the low at the bottom here, or do we have one more move to the downside? Is this 1, 2, 3, 4, and 5 here, or do we have the 5th in? I'm not quite sure. If we found support on 600, then of course we will be definitely, shoveling it in from that point, because that will confirm that we're going higher from that point. And this is what I mean here, because in this 4th wave to this 5th wave here, if I just go back to this, from this 4th wave to this 5th wave of intermediate degree with those brackets, we're looking for 5 waves, and we can have it in 1, 2, 3, 4, and 5 here. But at the same time, I'm also aware that this can all be the 5th wave as well. And this would be the 4th wave pulling back to the 600 here, the 4th wave 1 lesser degree, and then rolling over from that point. So we need to be mindful of that. But it's looking positive at the moment, because you can see that strong move up there. That's the 3rd wave. So we do have an impulse wave up there, and we'll be looking for a counter trend, which has basically done its thing at the moment. So we've got nice impulse wave to the upside, a 5-wave structure, and then we've got our A, B, and C that we're looking for. So now we're looking for support on, say, 580, and we'll see, because we've got 5 here, we'll get another 5 over here. But beyond that, we don't know. We can't confirm. So what will happen is that we'll be able to see from this particular move here, if it's really strong like a third wave like this, then we'll know on the right track. If it's really lazy like this, we'll be concerned and we'll be considering it an A and a B and a C as a wave 4, and then rolling over from this point here. So let's just see how we go with that. But by all means, trade long up to this point, but get out at 600, because if it is a bullish market, that will probably, a third wave will be longer than this wave 1 here. So it will take us higher. So you want to build on here, but yeah, let's just see how it goes, but keep stops out of the way down here somewhere. The corn market's the same as well. We've been talking about using this, to me, is sort of a bit more completed here in terms of 5 waves, the 1, the 2, the 3, the 4, and the 5 here. And I always like these kind of where it's slow. You can see that the market's slowing down through here. It's always a sign that it will pop to the upside. If you've been using the daily robo method, then just stay with that as such here, because it's working really well. So obviously your stops would still be under here. So that said, looking into here, we've also only got the pattern that's moving up through here on the daily is still only in 3 waves. So if we call this wave 1 here and wave 2, then we're looking for wave 3 up here, and wave 3 would be 1, 2, 3, 4, and 5 up to the 450 mark here. So we'd be looking for an ABC correction across the 450, and then looking to add to positions here, okay, at the 450. That said, we've been looking at adding positions all the way up through here, and let's take a closer look at that. So we've got this we've been looking adding all the way through here, and now we want to be looking to add on to the 440 here. As it stands at the moment, I'm looking at this being the A wave, the B wave, and the C wave back down to 438, or maybe somewhere in there, and then moving up from that point there. But if you're not too fussed, then pretty much buy where you can at the 440 was the aim. But it's looking impulsive to the upside. So you can also add, if 443 becomes a retested resistance, it's there at the moment, but it hasn't got it just yet, then you could buy new highs from that, because the 443, 3 is always the top of group 1. So taking new highs out here would suffice to building in the trade from that point there. You have to make a decision if you're going to exit at 450, or just stay with it, because what could happen is that this is wave 4 here. This wave 4 here could come back to wave 4 of 1 lesser degree. So we may end up getting, we'll get a larger correction. This is a small correction. Across here, we'll see a larger one. It will be 60% bigger than this one here that occurs here. So do what you need to do. The orange juice market, just on the daily chart here. Once again, I've always liked this as well. I understood this as corrective down through to here. I'm calling it a B wave. Had a look on long-term charts, and we're looking at a 5-wave structure to the upside here. Now, there's obviously a couple of ways that this can all be countered, but the other option is that this is wave 1 to here. This is still wave 2 to here, and this is an A wave, a B wave, and a C wave here, and we're moving up from there. Or otherwise we can count it this particular way as well. But I also want to be mindful that we can get a C wave in here first before we get this move up through here. But what we have been doing is moving in above the 140 here, in case we are looking at a C wave moving up, wave 3 moving up through here. So yeah, this move that's come off this particular low here, it's got 5 waves here, so it's got an A, B, C here, so we'll get another 5, and that's as much as we can say here. Because we got 5 here, we'll get 5 here. So we don't have a complete 5-wave structure here to call the market up, like 1, 2, 3, 4, and 5. We don't have that. That's what we're looking for. That would confirm the upside, and then we'll get an A and a B here, C, and then we'll be looking to go long on this one through here as such. It may not spend that much time here, because if that is the case, would be in wave 3 of this degree, and then would be in wave 3 of this degree here, because we would have 5 up through here. So, but look, a good opportunity here, but there is risks involved here. This could get, being under 150, could get uglier through here. The normal trading level style is to wait for support up here and trade from up here. So any positions in here would only have to be a quarter of the size that you would normally put in. All right, that's it. Thanks. Cheers.